Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. While the markets are in focus, we also have a lot of earnings that we will be tracking for you. So let's get in Mr. Vijay K Thadani, who's the Vice Chairman and Managing Director at NIIT, to decode their earnings. They reported it just a while back, and it looked like a good set of numbers. On a consolidated basis, their revenues are up 18.5%. Margins too have expanded by 550 basis points, and profits have come in at 55 crores versus 39.5 crore rupees. That is on a quarter-on-quarter basis. Mr. Thadani, good afternoon. Thank you so much for joining us here on CNBC-TV18. Can you give us a sense of your CLG segment? Because that saw recovery. In quarter two, it was impacted by one of your big clients. But this time around, there has been a recovery. Do you maintain your guidance, or will you be able to do better than what you had guided for earlier? And what about margins? You have seen a growth there as well. What is the margin guidance that you can give us?
Yeah. So first of all, I think in line with how we had projected this quarter, when we had said there would be a reasonable quarter-on-quarter growth, so we've had a very decent quarter-on-quarter growth in revenue, as well as an improvement in margin, because A, we were able to utilize our resources better, manage our costs better, and our new clients started delivering faster. Though the uncertainty in the environment remains, and our order intake and the new contracts that we received this quarter have raised our revenue visibility to 321 million. So I think these are some very, very positive signs. And this part of it was already baked into our results. And I think, therefore, our projections for the year to remain at 20% odd margin, and I'm now talking about the organic part, and having a single-digit growth overall year on year on the business stays as it is. I think what has also added in this quarter is the acquisition that we made of St. Charles Consulting Group, and that acquisition and its impact is also felt for the 55 days that the acquisition was part of the group, and that is also beautifying the numbers. Of course, they are going to be with us for the rest of the year as well, and therefore for the year, that impact will also be felt. But I thought I'll divide the work in two parts. One is our organic, and the second is the impact of the acquisition.
So, Mr. Thadani, just to confirm the numbers, the CLG, the Corporate Learning Group organic guidance, X of the St. Charles acquisition, you are maintaining that revenues will be high single digit and EBITDA margins of 20%, right?
That's right.
Okay. Now, in Q4, you will have full 3 months of the acquired company. What could that contribute? Could you give us an indication of what Q4 will look like with the acquisition for the CLG group?
Yeah. So if we take the St. Charles Group into consideration, then our growth is more likely to be 14 to 15%.
And on margins, sir?
In revenue.
And on margins, sir?
Yeah, I said our revenue growth for the year will be 14 to 15%, including St. Charles, on a constant currency basis.
Got that. And so the CLG EBITDA margins, including the acquisition, what would that number stand at for the full year?
Yeah, it will be little north of what we have of CLG organic, because this acquisition is both margin accretive in addition to being profit accretive. I mean, margin and profit accretive, as you can make out even in the numbers that we have declared.
How much north, sir? Your CLG organic margin guidance is 20%. So
yes,
this would be 22.
It will be about 50 to 100 basis points more.
50 to 100. Okay.
Okay. So that is on the CLG business. Can you also tell us what is the update on the demerger? You had spoken about it earlier. There are plans. These two segments would be listed separately. Where are we in this process?
Yeah. So we are absolutely on schedule. The first motion was heard, and the second motion is due after we get all the regulatory clearances. And therefore, as we said in the first quarter of the next financial year, we should have the demerger complete, obviously subject to all the other checks to be made, as well as all the other approvals to be made or to be received, for which we don't see any difficulty as of now.
Okay. Sir, SNC, are you maintaining the revenue growth guidance of 50%, or is there going to be any change in that for the full year? And even the EBITDA on Skills and Career Group, it's at 6.3 crores. It's higher quarter on quarter, but it's lower on a year-on-year basis.
Yeah. So let's answer both the questions separately. So first of all, Skills and Careers Group, as you know, of the new hires, it's a bit dependent on the new hires which get joined or get new offers that get rolled out to the fresh joinees. In the last quarter, as we could see, technology segment has slowed down on the offers they made. In fact, they made lesser offers than they make normally in this period. And on the other hand, the banks and financial services actually did very well in terms of new offers. Now, banks and financial services is a smaller portion of the total business. We believe this weakness in technology sector, which is technology hiring, is likely to continue through Q4, which anyway is meant to be a weak quarter because no hiring takes place as such. People are getting ready with their exams and fresh hires at least. So to that extent, I think the impact will be felt. And we do believe that our guidance there will be short of 50%. I think it would be more like mid 40 to low 40% on a year-on-year basis.
So between 40 to 45% revenue growth, right? For SNC versus your 50% guidance. And even this...
Right. And let me just complete on the margin. On the margin, on the other hand, I think we have done better, and there is a good chance that we will continue to maintain that.
Okay. So Mr. Thadani, out of time, but thank you very much for joining in. On a more leisurely day, we will continue this conversation to talk about the trends and the outlook for next year. Thank you very much for joining. That's NIIT for you.
Yes, that's about NIIT. Just a word